1995 will be remembered as a record year for Wall Street. On 69 separate days, the Dow Jones Industrial Average closed at new highs for a total rise of more than 1,200 points. It was also a record year for volume, with an average of 347 million shares changing hands on the New York Stock Exchange each day. How did investors keep up with this frenetic pace of activity? Many turned to public television's nightly business report, the nation's longest-running daily television newscast on business and the economy. In fact, during 1995, far more viewers watched Nightly Business Report than any other daily business program on broadcast or cable television. Why? Because NBR consistently provided not just the best coverage of the rally, but the most thorough analysis of the reasons behind it. At the heart of his coverage, the dean of market commentators, 17-year NBR veteran Paul Kangas. A former stockbroker and radio broadcaster, Paul brought his insight to the program with his play-by-play review of overall market activity during the course of each day.
The fear of missing out on this record-breaking rally turned most anyone with some cash into a buyer during mid-session.
And in a separate daily segment, Paul reported the story behind the story on big moves by individual stocks on the three major stock markets.
Gucci Group up 3 3/8. The company's holiday sales were reportedly very strong.
But NBR didn't just report market statistics. From its New York bureau, located in the heart of the financial district, co-anchor Cassie Seifert, bureau chief Scott Gervey, and a team of reporters, field producers, and camera crews brought viewers on-the-scene reports and interviews with key market participants. Join us now for highlights of Nightly Business Report's outstanding market coverage during this record-setting year.
More people were standing in unemployment lines last month, but that news had investors lining up to buy stocks on Wall Street today. The Dow Jones Industrial Average soared almost 58 points amid growing optimism that the year-long rise in interest rates may be coming to an end.
For 2.5 years, the nation's unemployment rate has been falling as the economy has been growing. For a year now, the Federal Reserve has been pumping the brakes, trying to slow the growth. Finally, signs from personnel offices around the country that the economy may be running out of gas. The unemployment rate jumped 0.3% in January to 5.7%, and Wall Street jumped for joy. Stephanie Woods reports.
Bad news for job hunters was good news for Wall Street. The unemployment rate in the U.S. increased for the first time in 2.5 years. Analysts say the report shows that the economy is cooling off to a more sustainable rate.
The market saw the economy in 1994 as too hot. So any evidence that the economy is slowing suggests that the rise in interest rates cyclically is near an end. That's what the financial markets wanted, and that's the news today that they got.
I think the Dow is going to have a spike sometime within the next month or so. Take the Dow up to, say, 4150, 4200. Heavy volume, heavy tape action, but that, will, to me, will be a sign to sell. And over 500 million shares in a day, that type of thing.
Mm-hmm. You know, the last time you were with us, July 22nd, the Dow was 204 points exactly below where we stood today, 37.35 then. You were very bullish. Even then, you saw the indexes showing firmness. You gave us some good suggestions. You said, first of all, hang on to IBM, which you first recommended on the program, in the 50 area. It was then 62. Now it's 75.5. What do we do with IBM?
I would continue to hold it. I think it's going to 100 ultimately, but I would continue to hold it. On back downturns, I would accumulate more.
All right, Detroit Edison, you recommended buying at 25. It's 28 3/8 and a good dividend payer. Stay with that?
Absolutely.
MedStat, it was around 15, 16 then. It was bought out at 27. Need I say more? A very good idea. And finally, Masco Tech Preferred, which was yielding 8.3%. It was 13 3/8 then. Still is. What do we do with that?
I would hold on to it.
Nice return.
Yes.
History was made on Wall Street today. The Dow Jones Industrials barreled through the 4,000 mark, closing up more than 30 points to 4,003.33. Good evening. I'm Cassie Seifert, live tonight at the New York Stock Exchange. Joining us to put all this in perspective is market strategist Elaine Garzarelli in her first interview since leaving Lehman Brothers. It was a bull run on Wall Street today as the Dow Jones Industrial Average charged through the 4,000 level, stampeding on optimism that interest rates are near their highs. Suzanne Pratt reports.
The stock market has flirted with 4,000 before, only to be turned away. But today it charged right through the roadblock to close at an all-time high. Fed Chairman Alan Greenspan was the man of the hour on Wall Street. His upbeat testimony on the state of the economy unleashed bond and stock market bulls. Rallies in both markets started Wednesday when Greenspan told Congress the economy appeared on track for a slowdown, suggesting the Fed may hold interest rates steady or even ease.
Joining me now in her first television interview since leaving Lehman Brothers is market strategist Elaine Garzarelli. Elaine, welcome. It's good to have you.
Well, it's nice to be back. Thank you.
I would like to talk about what you've been doing and will be doing in just a moment, but before we do, what do you make of this market?
Well, I think that the stock market correction that we had last year ended at the end of June. And if you look at the broad indices like the Wilshire 5000 or the NASDAQ, we actually bottomed at the end of June, and both indices are up about 10 to 15%. So we're really in the first leg of a new bull market, and I think any corrections from here would be very, very limited.
Does the breadth of the strength in the market right now give you other indicators in that direction too?
Well, I'm not a technician, so I really look at only fundamentals, and based on earnings growth this year, and I think that I probably have the lowest number on Wall Street. I think earnings will be down slightly this year for the S&P 500. I think the market has already discounted that. Some of the indices like the transports and the utilities dropped as much as 30% last year. So we've gone through the discounting of down earnings in industries like autos and appliances and home builders. So I think that the market is ahead of itself this cycle by about 9 months. So where you might think that we're going to go down now into a bear market, it happened so far ahead of time, just like Greenspan was ahead of the curve, that you're going to get the upturn long before you would have in any other cycle.
The blue chips helped investors see green this week. IBM and General Motors led the list of big industrial companies reporting record profits for the first quarter. The earnings reports gave yet another boost to the stock market, despite a weak bond market and falling dollar. Scott Gerby reports.
It was a great week for the bulls. The Dow gained nearly 62 points. That's 1.5%. And for the first time in a long time, the rally was not driven by the bond market. IBM was one hero, rising more than 6%. It reported unexpectedly strong first quarter earnings. General Motors was another. It too had a good earnings report this week.
Earnings reports have obviously been very, very strong of late. So we've had some wonderful Q1 earnings. That's one important factor.
The decline in the relative value of the dollar has contributed to these positive earnings reports, but analysts see signs of health in many of the blue chip companies after accounting for the dollar effects. On the trading floor, the atmosphere remains bullish.
This market has been picking out the things that it wants to focus on and going up on those things. It ignores bad news and it takes recognition of good news. This time it's earnings. If it turns out to be bonds, I'm sure it'll take recognition of that.
The market strategists are not as enthusiastic as the floor traders right now. They are still looking for at least a small correction here. They have been looking for it for about 250 points. Scott Gervey, Nightly Business Report at the New York Stock Exchange.
I can tell you one thing, Linda, this market is not running out of fuel. It just goes higher and higher, and it's still running. Dow Jones Industrial Average for the 22nd time this year at a record high, up a little over 6.5 points. And incidentally, for the month of April, overall, the Dow gained 163.5 points, or 3.9%. Who said April was the cruelest month? We have 152 more gainers than losers today, 153 new highs versus only 30 new lows. Citicorp Preferred P's stock topped the active list on 15.75 million shares, moving up 13.30 seconds. And then Corning down 3.25 points. The company says the chances of Dow Corning going into bankruptcy have been significantly increased because of recent breast implant liability rulings. IBM down 2.25 points. Today's Wall Street Journal says the company's recovery could be threatened by heavy reliance on mainframe computer sales, which are slowing. Chrysler moved up 1 3/8. The USA Today newspaper suggested the company will boost its dividend from the current $1.60 annually by the month of June, and maybe even before. CUC International, fifth in volume, lost a point.
Well, as the Dow gets closer to that 4,500 level, defying all historical trends, the rally shows few signs of stopping. Although market analysts are generally bullish, they do offer some words of warning. Scott Gervey reports.
Another day, another record high. It is almost getting to be routine. And each time the Dow approaches another century mark, the questions come. After all, it was only at the end of February that the Dow closed above 4,000. The Dow has gained 17%. That's 650 points so far this year. The experts say there is good reason for the advance, but the risks have increased.
The good news is that the fundamentals have been favorable. The bad news is that the markets, to a substantial extent, already discount all this good news that has come in. And there's not a big margin for error if we would get a negative shock.
The stock market rally has come in defiance of many changes in fundamentals. The economic growth rate has fallen from express train speeds to a snail's pace. The value of the dollar has fallen sharply against the Japanese yen and the German mark. And political battles are adding even more uncertainty to the usual confusion of the national budget process. Still, investors keep investing. Stocks keep rising, not just the Dow, but the broad indices as well. And while there are concerns about short and even intermediate-term movements, Wall Street's experts are bullish in their long-range outlook.
It's never easy. I think it's still going to be right to be invested going into 1996, but I think the switch is going to be back toward more of the small companies, and I think economically sensitive stocks are going to be interesting.
There was a day 2 weeks ago when 4 small high-tech companies made initial public offerings. By the end of the trading day, all 4 had doubled in price. That is exactly the kind of speculative froth that often marks the top of a market. Scott Gervey, Nightly Business Report, New York.
Talk about first impressions. Netscape Communications stunned Wall Street today as the company's shares more than doubled in value in its first day of trading. Interest in the internet-related software company has been so high that underwriters doubled the issue's asking price from the original target of between $12 and $14 a share. During volatile trading today, the stock soared as high as $75 from its $28 a share offering price. Netscape gave back some of those gains to end at 58 1/4, up 30 1/4 points. But now some analysts caution the company will be hard-pressed to live up to the hype.
If you can't sleep unless you participate in the internet market, you're looking for an internet play. Yeah, I would nibble away at a company like Netscape right now. But for the average investor, I would wait and see if the company actually executes its business plan, because it's very early in its corporate life right now.
Netscape has yet to earn a profit, and it'll face competition from high-tech giants IBM and Microsoft. The Dow breaks through the 4,800 mark, closing at 4801.80. It was fueled by a strong bond market and a weaker than expected report on retail sales. Good evening, I'm Kathy Seifert in New York.
And I'm Jeff Yasteen in Miami. Paul Kangas is off tonight. The Dow's not the only index off and running. We'll take a look at why the S&P 500's been so strong lately. The S&P 500 index set yet another new record high today, closing the day over 583, up more than 4 points. The index just seems to keep plowing along with no signs of slowing down. Diane Estabrook explains why from Chicago.
Bullish trading at the Chicago Mercantile Exchange pushed the S&P 500 index to 580 for much of the day. Since January of this year, the index of 500 stocks has gained nearly 120 points, hitting historical highs. Lower interest rates are getting much of the credit for driving the index towards 600. Some traders say investors were convinced earlier in the year the Federal Reserve would cut rates despite rate hikes throughout 1994 and in February.
The Fed did tighten one time earlier this year, but in that time period, T-bill and Eurodollar futures were already advancing, possibly discounting the possibility that that might be the last tightening of credit from the Fed. And in fact, it was the last tightening.
Some analysts also say the index was buoyed by the devalued peso. Many hedgers who were interested in investing in Latin America opted to play it safe and invest in American stocks instead. Corporate earnings are also credited. Strong profits within the manufacturing and financial services industries have ignited interest in investors. And finally, the sagging dollar made it more attractive for foreign investors to pour money into the U.S. stock market.
The tech stocks took a tumble today on a day when many traders stayed away in honor of Christopher Columbus. Those who turned up had little to celebrate. Scott Garvey reports.
When the volume is light, stocks are often battered, and today was no exception. The tech stocks that have led the market to new heights repeatedly this year today led their followers in the opposite direction.
Got a lot of jitters in the marketplace, mostly related to earnings. There have been a lot of pre-announced earnings disappointments over the last several days and for the last week or so as companies gather up their numbers for the third quarter and find out that they're below where the street's looking for.
Novell made that kind of announcement after the close on Friday. It said a big drop in sales of its application programs, including WordPerfect, would cut earnings to half street expectations. Novell has yet to deliver a Windows 95 version of its program and is losing market share to Microsoft. But Microsoft didn't do too well today either. The company is down more than 20% from its high this year. Now that the initial sales of Windows 95 are over, analysts are worried the corporate sales of the product expected for the fourth quarter may be delayed. And semiconductor giant Intel has also dropped 20%. It stands to sell many more computers when users upgrade to Windows 95. For the first time this year, some of the pessimism is creeping onto the floor of the New York Stock Exchange, where the advance has been almost straight up since January.
The atmosphere seems to me to be one of nervousness more than anything. Concern about third quarter earnings, certainly. Interest rates, always a focus. You can make a case in any way you'd like, and since everyone is a little bit nervous, some people are making it bearishly.
Investors are always a little extra cautious in the month of October, but market analysts will be watching very carefully the trading action in the next few days to see if the tech stocks can regain their leadership position. Scott Garvey, Nightly Business Report at the New York Stock Exchange.
Let's go straight to the record. You had a bullish stance in effect since last December, and then during the summer you predicted that we'd see a period of group rotation, which is exactly what happened. You've ridden this bear market up nice, or bull market up nicely, but yesterday you issued an intermediate sell signal to your subscribers. What does this mean they're supposed to do?
Well, worry, for one thing. That's right. We've been bullish all the way up. A lot of analysts, fine analysts, have missed this market because they don't realize that this is a mass psychology market, and that's why charts and fundamentals have not been working. And I think the mass psychology is based on fear. It's currency fears. Now, at the beginning of the year, we had the crash in the U.S. dollar, and then we had the crash in the Mexican peso. Now we're getting declines in the French franc and Italian lira, plus rises in the German mark and the Swiss franc, which is really harming their export and tourist industries.
All right, now, but the stock market here has really been getting volatile. Does this mean that we've seen a top, in your estimation? You wouldn't put out a sell signal for any other reason. Does this mean get rid of everything?
No, it means start doing some lightening up, get rid of margin accounts. We have, I'm taking my subscribers out of the market temporarily here.
It's party time on Wall Street as the Dow Jones Industrial Average runs through the 5,000 mark and closes there for the first time ever.
The Dow Jones Industrial Average stands tonight at 5,023.55. This is the first time in history the Dow has ever closed above 5,000. Scott Garvey is standing by live at the New York Stock Exchange, where it's now a lot quieter, Scott, than it was just a few hours ago.
That's right, Cassie. It was a lot more frenetic here just a couple of hours ago, but it didn't start out that way at the beginning of trading today. In fact, for most of the day, it seemed like 5,000 was just out of the question. While the Dow showed gains early, it stayed under 5,000 throughout the morning. The broader market was weak, and many of the hot internet stocks over on the NASDAQ were in a sharp correction.
The internet stocks have really backed off from their highs for the year, partially because of sell and underperform ratings given to them by Smith Barney. Joining me now is Jonathan Cohen, internet and online analyst with Smith Barney. Jonathan, these stocks have performed so well this year. What is there to not like about them?
I think what there is not to like about them is just that they have performed so well, and that the market already seems to be discounting many of the good things that we think and that the market thinks are going to happen going forward for some of these stocks.
And tell us about some of the companies in this area: Netscape, Spyglass, Netcom Online, UUNet. These are all companies that have just come public in the last year or so.
Generally speaking, these are companies that have only been public for a very short period of time and that don't have long-standing operating histories. These are companies that are positioned to participate and possibly to succeed within the internet services market, but which we are exercising a degree of caution towards right now.
And on another record day, but not a record for averages for a change, a record for volume on the New York Stock Exchange, 639.5 million shares, which is more than the day after the 87 sell-off, shall we say, 508 points. Then it was 608.5 million. Now, couple that with the fact that there's a lot of complacency on Wall Street, capitulation by some of the grisliest bears recently, and a loss of the main charging group on the upside, the high-tech stocks. Does this not add up to the top of the bull market?
I don't think so, Paul. I think the market is choppy, sloppy, a bit toppy, but really the breadth is not compelling for stocks. We've had some big moves this year. The market has self-corrected. It's been rapidly rotating. My sense is that we're in another adjustment that will take the market down, but the drops have been relatively shallow. So my feeling is that once we know what the Fed will do with interest rates, and clearly I think they'll make a move, if not in December, but in January, the market is likely to find its way back up once again.
New York traders are blaming the budget battle in Washington. Republican leaders in Washington are blaming the president. But the bottom line is that the Dow Jones Industrial Average closed down more than 100 points today as uncertainty grows about the direction of interest rates. We have two reports, beginning with Scott Kirby in New York.
The budget battle battered bonds and the big board today. The Dow losing 101 points in heavy trading. The talk on the street puts the blame squarely on the backs of the politicians. Bond traders are afraid lawmakers will sacrifice some promised deficit reduction to produce an agreement. They also believe the stalemate makes it less likely the Federal Reserve will cut interest rates when it meets tomorrow.
I'm Dennis Moore in Washington. Republicans called Wall Street's reaction the Clinton crash.
For 4 to 5 months, the markets have and the economy has been betting on a balanced budget because they have watched the Republicans in the House and the Senate move towards a balanced budget. This is what Clinton has done to the markets because he refuses to balance the budget.
Welcome back, Bill.
Good to be here again.
It was a great quarter. It was a great year. Let's go right to the boards and look what the Dow Jones Industrial Average did for the last 3 months.
Well, it was up 6.8%, but it was the best of the four we've got up there. The S&P went right along with it. There's more big stocks in this quarter. I think there was a little resting on the part of the NASDAQ and certainly on the Amex.
And for the year, the Dow was up over 1,200 points, was it not?
That's right, 33.5% on the Dow, better than 34 for the S&P, almost 40 for the NASDAQ, was higher earlier in the year, and 26.5 for the Americans. So it was a very good year. It was the fourth best since World War II, percentage-wise.
Unbelievable. Well, let's get back to these last 3 months in the Dow Jones Industrial Average stocks. The best performers were as follows.
Well, you got Texaco. The oils were behind the general market, but they played catch-up lately. That 4% dividend helped a bit, too. Merck continued its year-long recovery following the end of the Clinton health care plan, and McDonald's rose along with other consumer non-durables.
All right, let's have a look at the worst performers in the Dow.
Now, here's one that I got hurt with. Woolworth. This looks to me like there's going to be a lot more restructuring to be done before this retailer turns around. International Paper is down on fears of a downturn in the paper industry. And American Express, that's just profit-taking after a big run-up earlier in the year.
The retailers, it looks like the best sales they had was their common stock. Are they due for some kind of a comeback as we enter 1996?
Well, you hope so, but I think this next 10 days, 2 weeks is going to tell us a lot. They tell me that Christmas merchandise must be paid for by January 10th, and that could be a very telling date. I think those who didn't make it will file for bankruptcy, so I think got to wait a few more weeks on that.